Welcome to your daily stock market summary from MarketSnap. Hey everyone, buckle up because we've got a wild ride to unpack from today's market action. It's been a roller coaster out there with geopolitical tensions, economic data dropping bombs, and some serious volatility shaking things up. Let's dive into the key moves and what they mean for us as long-term investors, while also keeping an eye on the short-term waves. First off, let's check the pulse of the major indexes. It was a rough day across the board, with the Dow Jones slipping a bit, the S&P 500 taking a hit of about 0.6%, and the Nasdaq dropping nearly 1%. The Russell 2000 wasn't spared either, down a touch. What's driving this? Well, a big chunk of it ties back to the ongoing conflict in Iran, spiking oil prices, and some disappointing economic numbers that we'll get into shortly. For long-term folks like us, this kind of pullback can signal a buying opportunity, but the near-term uncertainty is definitely something to watch. Speaking of that conflict, the situation in the Middle East is the elephant in the room right now. Oil prices are holding above the $100 mark per barrel after U.S.-Israel strikes on Iran, with the Strait of Hormuz disruptions causing major supply headaches. Analysts are warning that a prolonged conflict could push oil even higher, potentially to $150 in a worst-case scenario, which could trigger an 8 to 10% correction in the S&P 500. But here's a silver lining. Some experts using game theory suggest this spike might not last once tensions ease. As long-term investors, we need to think about energy sector exposure here, but avoid knee-jerk reactions to these short-term geopolitical flares. Zooming back to the broader market, the S&P 500 structure is raising some eyebrows. There's a lack of leadership beyond the usual big tech suspects, which could be a vulnerability if this volatility persists. For us, this is a reminder to diversify beyond the megacaps and look for value in underappreciated sectors, especially during dips like today's. Now, let's spotlight some of the day's big movers, starting with the winners. Among large caps, memory tech players like Micron Technology and Western Digital were on fire, with gains north of 4 to 5%. These jumps are tied to the ongoing AI boom, as demand for high-performance computing components isn't slowing down. It's a short-term win, but for long-term strategy, these names could be solid if you believe in the secular growth of AI infrastructure. On the flip side, we've got some heavyweights dragging the market down. Meta Platforms and Broadcom took hits of around 3 to 4%, reflecting broader tech sector pressure amid the Iran conflict's economic ripple effects. Even Adobe stumbled significantly, down over 7%, despite beating earnings estimates. Seems like investors are jittery about leadership changes and AI transitions. For us long-termers, these dips might be entry points, but patience is key with this much uncertainty. Looking at the market movers shaking things up by volume, Nvidia remains a hot topic, though it dipped slightly today. Apple and Amazon also saw active trading with minor pullbacks, while Tesla held steady despite broader EV sector concerns. These names are often the heartbeat of market sentiment, and for long-term portfolios, they're core holdings to weather storms like today's. Diving deeper into the most active stocks by volume, we've got names like Intel and NIO seeing heavy action, with NIO popping over 5% as investors eye EV growth in China despite global tensions. Marathon Digital also caught attention with a nice bump, reflecting crypto market swings. These are more speculative plays, but they show where short-term money is flowing, something to monitor without chasing the hype. Let's pivot to the economic backdrop, because it's not just oil stirring the pot. The U.S. GDP growth for Q4 2025 was revised down sharply to just 0.7%, way below initial estimates, signaling a slowdown even before the Iran conflict hit. Add to that sticky inflation readings, core PCE up to 3.1% in January, and consumer sentiment taking a nosedive post-war outbreak, and you've got a recipe for stagflation fears. For us, this means keeping an eye on defensive plays and not overreacting to rate cut delays, which markets are now pushing to later in the year. Shifting gears to earnings, it's a busy week with some heavy hitters reporting. Companies like Oracle and Adobe are in the spotlight, with Adobe beating expectations, but still seeing shares slide due to broader market nerves and a CEO transition. Ulta Beauty and Dollar General are also on deck, offering insights into consumer spending trends amid these economic headwinds. For long-term investors, earnings are a chance to gauge company health beyond daily noise. Focus on management commentary over pure numbers. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these reports and make informed decisions. Peeking at the week's top performers among large caps, names like Garmin and Shopify have been crushing it, with gains over 14 to 21%. These moves are fueled by sector-specific strength in tech and consumer cyclical spaces, showing pockets of resilience despite the broader market funk. Could be worth a look for long-term growth plays if the fundamentals hold. Conversely, the past week's biggest losers include Genuine Parts and Rivian, down double digits. These drops highlight sector vulnerabilities. Auto and discretionary spending are feeling the pinch from economic slowdown fears. For us, it's a reminder to stress test portfolio holdings in these areas. Wrapping up with a sector snapshot, industrials and consumer cyclicals led the pack this week with gains, showing some investor confidence in economic recovery plays. Energy also got a boost from oil's surge, no surprise there. On the downside, healthcare took the hardest hit over the week, reflecting broader risk-off sentiment as investors flee to safer assets amid war jitters. Financials also lagged, pressured by private credit concerns that are spooking the market. For long-term strategy, these beaten-down sectors might offer value if you've got the stomach for volatility. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep-dive SWOT analyses to keep your investment game sharp. Hit that subscribe button, drop a like, and let's navigate these choppy markets together. See you tomorrow.